To this now, farmers will face higher debt servicing costs together with escalating input costs due to higher interest rates and a rise in fuel prices. And that's according to Paul Makube, who is a senior agricultural economist at FNB Business. The South African Reserve Bank, you'll know, increased interest rates for the second time this year. Makube says not all is lost, though, for the agriculture sector, despite challenges like the ongoing war in Ukraine. He says relatively strong commodity prices should somewhat help limit the pain. Well, Makube joins me now for that conversation to take it a bit further. Thank you, Paul Makube, for joining me. So I had a read at your piece that you put together, just analyzing the impact of the interest rate, the repo rate increase from the South African Reserve Bank. Many of us are saying it's going to bite, but you are saying it's going to bite particularly in as far as the agriculture sector and farmers are concerned. Why is that?
Thanks for having me, and good afternoon. Yes, as you're aware, costs have been relatively, from a interest perspective, have been relatively flat over, flat over the previous year, and we're seeing that momentum. The interest rates, upswing getting momentum. This is the second one that we are seeing at the moment. That the interest rates are going up, and obviously debt servicing costs for farmers will actually have to go, up. We have seen, farmers benefiting from higher commodity prices, in a strong, harvest environment in the previous 2 years that improved the financial situation. But the rising costs and also the input costs that have been rising, at the beginning of the season and ongoing at the moment, with the higher cost of fuel as a result of higher crude oil prices, which are international factors. They're starting to erode on producer margins, and therefore, things such as the replenishment of machinery and tools that are used in the production process are likely to impact it negatively. We've seen strong purchases in the last year, and at the beginning of this year, we had over 20% so far increase in purchases of tractors and combine harvesters for the agriculture sector. So, but given the small contraction in the harvest that is expected for the summer crops, and the increase in interest rates, we are likely to see a situation that that momentum starts to slow down as farmers reassess their finance options.
But yeah, and I like the picture that you paint. Well, I don't like the picture you paint, Paul, but I like the way you make us understand the ripple effect of an interest rate increase in as far as the agriculture sector is concerned. All of this combined, the higher interest rates, the situation around the fuel and other input costs increases, and the harvest that you also mentioned there, that you say will not be, at least for 2021 into 2022, will not be as high as we would have wanted it to be, the summer harvest. What is the combined impact of all of that, and how can it be mitigated, if at all?
Well, the impact is obviously on the consumer in terms of, higher, prices of agricultural commodities, food commodities, as these have to be passed on. That is the impact that we are likely to see. But I think perhaps we should also, mention that given the fact that we see a smaller harvest relative to last year, but it is still a good crop of summer, summer crop that is expected. So from a supply perspective, we are relatively well supplied. That should almost limit the pain that we were likely to see if the harvest has been even smaller than we are expecting at the moment. So yes, the consumers are likely to see a situation in the short term of price pressures in the food commodities. at the moment, there isn't anything that can, not much that can be done at the moment to alleviate the situation, given that these are mostly externally driven, pressures that are coming on the local market.
All right, Paul, thank you. I've got to thank you for your time and your insights. I must say, what you wrote crystallized for me what, some of us don't normally think about along those lines in terms of value chains in various sectors, such as agriculture. A lot of us, when you hear interest rates, right, you immediately think about, your loans, the loans that you have, your home loans and other kind of lending that you've exposed yourself to. But it was refreshing to read what you had to say about what the impact is in one of the productive sectors of our economy.